Have we got this on, guys? We're okay? Can everybody hear me all right? I'm going to move around a little bit today for you and hopefully provide you with some interesting stuff. We're going to spend the next 30 minutes or so together talking about a couple things. One, I'll give you an overview on TenX and kind of what we do, give you some context. Secondly, we're going to share with you the research that we shared in Monaco, which was where do you invest in times like this when we have crazy economic times like we have today, and where are people earning returns in those spaces. And then we're going to talk about space and specifically our point of view on the space industry and some investments that we've made in the area so far. I have a prize up here. That bottle of wine that you see there is from my cellar. It's a 2005 French Bordeaux from one of the top winemakers. It's his private line in France, and it's a gift. It's a prize for the person in the audience that can tell me today, just yell it out as I can hear you, how many companies are in the space industry today? 99, 10,000 others?
7,000.
Sorry?
7,000.
7,000?
10,001. How do you define all of it?
Sounds like a scientist. How do you define it? Anybody else numbers? You're way off, all of you. Anybody?
100,000.
No, way too high. Yeah, there's a... What did you say?
100,000.
100,000, way too high. Yeah.
20,000.
No, 1,500. I'm going to have to ask you another question then. How many companies are funded in space? How many companies do you think are funded? Well, what number are funded with some form of outside capital?
500. 350.
Who said 500? That wine's yours. It's almost 500, just under 500 are funded. About just over 1,500 companies are actually described in the industry today, declare themselves. So let's talk a little bit about TenX and kind of who we are. Down the right side of the screen there, you'll see kind of a summary of us. So we're hands-on operators, personally $9 billion in exits. So we're operators. We run the fundraise process for the entrepreneur. So we give the entrepreneurs back half their time to sell and grow the company. We're experts at running those processes. We're experts at scaling up sales and marketing quickly. So whether that's from the hundreds of thousands to the millions to the tens, or the tens to the hundreds, or the hundreds to the billions in 2 years or less, we're experts at that. And we're experts at something that not very many people are talking about today, and really, in our opinion, is critical, which is business model innovation, because that's really one of the few sources of real competitive advantage in any business today, in any industry today. As I say, it's TenX Ventures is really my family office with about 300 investors now that invest alongside with us in our deals. We have a point of view about technology, and that is if you're a tech startup today and you're not using the blockchain and using AI, you're probably out of business in 3 or 4 years. So we view those as horizontals, not verticals, and you see that in the map and that we show you there. And we invest in 5 verticals that sort of are disproportionately going to benefit from the use of those technologies. You see those across the top: SaaS and fintech, robotics, legal cannabis. We're going to talk about that in a minute, and space, of course, as sort of our core ones. And my contact info on the bottom, I'll show that again at the end. These are the companies that we've invested in over the last 5 years. You'll see 7 exits in 5 years there across the group, and we just keep growing. We'll probably add about 8 to 10 a year now, 8 to 10 a year, maybe 10 or 12 a year. So let's share with you the research that we talked to the world's wealthiest and the billionaires about in terms of how do you make money today in this kind of market. And really, if you look at where we are, we're at a very, very unique time in economic history of what's going on in the world today. You look at some of these things, I won't read them all to you, but low inflation with low interest rates. The biggest financial experiment in human history is occurring with quantitative easing. Negative interest rates in Europe, right? You're being charged to leave your money in a savings account in Sweden and Switzerland today. You're being charged 0.2% to leave your money with them. By the way, it's crazy. All the existing models no longer seem to apply. If you look at the fundamental basis of investment, it's being challenged because 85% of professional money managers can't even match an index and have not been able to do that now for almost 50 years. And I think a couple of things that most people aren't talking about that we think is really critical. One is demographics, an aging West and an aging China. I want to talk just for a second about that because that drives what is a really critical issue here in our view of what's driving the economic environment today and will for the next sort of 20 years. And that is this, that with an aging West, we're going to have, and an aging China, we'll have, for the first time in history, it's just started about 8 to 10 years ago, for the first time we'll have an entire generation of people that will never see interest rates above in double digits, ever. We have massive excess savings in the world today, particularly being generated from Asia and the Middle East, although it is also coming now out of Africa and Latin America. This has been going on for years. That's why interest rates are so low. That's why bond prices suck. That's why the stock market's out of control at record highs, even though it has nothing to do with the fundamental basic economics behind the stock market. And most of that's being driven by computerized trading today, right? Algorithmic and computerized trading. Almost 3/4 on a daily basis today of American stock exchanges are algorithmic traded by computers, not by humans at all. And this excess savings will drive, I'll talk about this in a minute, but we'll be a little bit counter on this. Millennials, we will argue, will be the luckiest generation in the history of humankind, even despite the fact that everybody says they have a difficult time. And that's because they'll never see interest rates in double digits in their life. There's so much supply as a result of that. So the old models, those things don't work anymore. And so we said to them, if you look at this business, what does it really mean? Well, the truth is that what it means is that all the money we've spent, all the money that's been invested, all the Nobel Prizes that have been given out, show us one thing, that 85% of these guys can't match an index. That's the facts. So that tells you that the fundamental basis of investing no longer works. These models don't work anymore. None of this stuff actually applies, and we're seeing legends are leaving the business. Right? People that have been in private equity, venture capital, and institutional investing for 20, 30, 40 years are just quitting, shutting shop, and closing down because they can't make money anymore in these times. Very different times. So they said, where does an investor make money? So we went and did the research to show them where. And what we showed them was the historical allocation models don't work anymore. They don't incorporate much of this new challenge that we see that we laid out in the previous couple of pages here. And so when you cut it in short, you say there's three things, there's three places you really want to invest in times like this. And by the way, does anybody here think that the economy is going to continue to grow upwards? Do people think there's going to be a recession? Let me just show of hands. How many people think we're going into economic recession in the next 12 to 14 months? How many people think we're not going to see a recession anytime soon? So we have some hopefuls in the room. I hope you're investors because I'd like to talk to you if you are. Yeah, I mean, the ugly cold reality is that the data shows us that we are likely heading into some kind of dip. It doesn't make sense. But the supply of capital shows us that it doesn't matter what the economics are, that money is still looking for a place to go, and they're going to put it in the safest places, which today is still the United States, whether we like it or not. T-bills, US dollar, still a place that everybody in the world wants to put their money. So where do you make money in this kind of environment? And if you believe that there's a slowdown coming, or if you believe maybe not a slowdown, but there's some disruption and change coming, then where do you make money? One, in lending, whether it's B2B, offline, online, and we love Sharia lending as well as a massive area, a massive opportunity. Second place is in disruption. And that's what you see, the list of disruption here, of areas where disruption occurs. I'm going to talk to you a little bit about blockchain, AI, and cannabis, but you can see the others on there, and we're going to talk a fair bit about space here in a moment. And surprisingly for a lot of people, when we show them this data, startups are incredibly resilient in economic downturns and in tough economic and turbulent times. Why? Because they already have to be really lean and mean, and they already have to be agile and have to be able to move around quite a bit. And so if you look at that line there, you'll see that goes all the way back. Startups, actually, their valuation does not do very badly at all if you believe that you have tough times or you have difficult economic times that are tough to figure out. So let's talk about one of those disruptions, blockchain, for a moment. This will change your life more than any of the other three disruptions we've had. Most of the people in this room, when I look around, were around for the internet in the late 90s and early 2000s. Some in here, maybe not. I may be dating myself a little bit for those folks, but they certainly know smartphone and social media. But just like every company today is an internet company, every company within a decade will be a blockchain company. And there won't be any more blockchain funds and AI funds, just like there's no more internet funds today. If you look at where the blockchain is today, you can see it's very early in the adoption cycle, about 10 to 12%, depending on whose data you look at. And I think the interesting thing about this graphic is the rate of change of penetration of inventions over the last 25 years, 30 years. You look at how long it took penetration to occur, meaning 90% or more of the market in early inventions over humankind's history, and then you look over the last 2 to 3 sort of cycles, you'll see that cycle has dramatically shortened, right? So the one thing we know for sure over time is that the only constant is that change is increasing, right? That's what we know for sure is happening. And so we think we're right at the tip of blockchain, sort of 97, where the internet was. We've written 2 industry-leading pieces of research on this. They're free. They're on our website. If you want to download them, you're welcome to do that. One on the blockchain on business models, and a how-to on artificial intelligence. In the blockchain, we found how the blockchain is disrupting business models. We talk about business model innovation as one of the core areas, one of the few areas left to create real competitive advantage. And you can see already how the blockchain is driving change in major corporations and in startups today. A huge opportunity there. I just want to spend 1 second on something that nobody talks about right now when we talk about blockchain, and that's trust. Right? And why the blockchain is so important to this and why it matters. And what we laid out for you here is kind of the sort of historical bases of trust over time for humans. And so if you look at this first one, personal trust, that was what humans, up until we really got past the Second World War, that was the only sort of level of trust we really knew. And as humans individually, we tend to still use this formula of how well do I know you, intimacy times how credible, how much do you know, what's your background, what are your skills, to judge whether or not I'm taking a risk to trust you or not. So some of us still use that interpersonally, but after the Second World War, we moved into this phase of institutional trust where big government and big companies would take care of you for life, and you'd have a job for life and a pension and health care forever, and they give you a free education and a low interest loan. And in the 80s and 90s, that sort of social contract, that change of trust was the institution times the social contract, really blew up, right, with re-engineering and mass layoffs, even in government sectors in many cases. And then we had a second institutional trust phase hit us when social media and social media networks exploded. And we all thought that all we have to do is trust them and give us their information, and they won't do anything bad with it, and nothing bad could ever possibly happen by me sharing my name and my information online. And I think we have learned over the last couple of years that that social contract has also been broken pretty badly. And so we've kind of moved away from this sort of institutional trust has kind of been destroyed. And what we see happening is this movement into what we call anonymous trust, enabled by the blockchain and artificial intelligence. And anonymous trust is about authenticity and proof. And the world is moving in that direction. You're going to find more and more from an investment perspective, investors demanding proof of results and proof of, and in science, with what a lot of us do in this room in the space side, you know, the actual real proof of product and proof of commercialization and commercial opportunities is one of the biggest challenges we're going to have. So just a sort of short note, a side note maybe for you there on trust, but we think this is one of the most important things, and this is what's going to drive the change at the government level, will be this new model of trust more than anything. So let's talk about artificial intelligence for a second. The scientific basis of fundamental investing has failed dramatically. You see in the bottom corner here where 85% of professional investors' money goes into places that lose money over time, that don't meet an index with fees, lose money. And you can see what's happened with technology here over time, even with the most recent technology like smart beta and IBM Watson, and the most recent Nobel Prize winning work on economics and finance, the Fama French work. None of that has delivered very much in the way of alpha. Alpha is returns in excess of cost of capital or versus an index. You can see very few of them have actually really delivered on this. So the true proof of AI has not been delivered yet. It's early stage. You can see we've kind of tipped our hat at one company we've invested in around algorithm and crowdsourcing there. But this is our point of view on the maturity model of what the artificial intelligence industry looks like and what's coming here. And you can see most of AI today is really, really weak basic AI. In my old days, we used to call it advanced predictive analytics before we had artificial intelligence as a common theme and a common conversation. You see some of the smart beta funds have moved along into that second step there, that second generation, but the vast majority are way back using really almost spreadsheet-like intelligence, if you will, rules-based that you could actually build into a Microsoft spreadsheet if you wanted to. We've invested in one company that's out there on the human AI side already, and there are some companies that are moving along this way, but I have to tell you, the combination of space and artificial intelligence and blockchain is unbelievably powerful, right? Like, this is just incredible, this opportunity when you mix and match or combine these. So we're a big investor, we're a big fan of artificial intelligence. Now, you might laugh at this, but cannabis is a huge disruptive force in our world today. How many times has prohibition occurred in humankind history? Once, now twice. This is the second time that prohibition has been removed from a restricted item. This industry is the size of the alcohol, tobacco, pharmaceutical, and nutraceutical industries combined. And it's good for you. So this industry is a massive, massive disruptive force. And you can see what's going on worldwide today. Canada obviously is a dominant leader in the space. The United States on a state level is moving. Europe is slowly going into this. And $1 trillion will be invested in American cannabis companies over the next decade. $1 trillion will be invested in cannabis in the United States alone, and another $1 trillion worldwide over the next decade. I love to leave people with this page with only 3 roles or only 3 companies that will be left in the cannabis industry in the next 5 to 8 years, and that is, you're either a consolidator, you're preparing to be consolidated, or you're roadkill, right? Because that's how fast this space is changing. This space is changing faster than high tech is changing, yet it's a physical product space. It's unbelievable to watch what's going on. Okay, so let's talk about space and the research we've done and our investments in this space. We see space obviously as a major disruptive force, and historically is a proven source of huge disruption and innovation. So anybody, in my view, that doubts that space can change not just our world but other worlds, I think is probably missing the points of reality today of what's going on in the world. We really see opportunity, and what we see missing is the real-world application of the research that's gone on to date to actually create commercial products. And that's one of the areas that we focus on and we will spend our time on. This is another way that we look at the industry. We call this our space industry map. You can see 1,558 companies have sort of declared. Not all of them are raising money. Many of them are services companies. Just under 500 for our lady that won the wine. Just under 500 companies or so that are funded 22-odd billion in investment raised. And we see there's about 10 buckets here. We've put the basic R&D up there just to complete the map. But you see there's about 10 buckets up here of what we call segments in the industry, and we couldn't put everyone in every one of these spaces because some of them are so large, there's so many players, but just to give you a representation, a sense of kind of who's in the playing field, what's the playing field look like, and then we take that information and we map that against an industry growth matrix, right? And we look at growth and market size and how attractive are these relative to each other, and we did these for this relative to other industries as well. And then we look at what we think is really the differentiator, which is business model innovation, the degree of business model innovation, and how capital intensive are you going to get, which directly reflects earnings, of course, and returns. And again, we're able to look at the industry and it's going to say what is attractive, what's the most attractive based on your investment objectives here. And then we plot it against what we call our hype curve. And look at, by counting press, by counting mentions, by counting fundraise, by counting projects, we're able to kind of get a sense of, where are all those segments in sort of what is a classic kind of hype curve kind of approach. And you can see most of them are sort of climbing up that curve, which is usually a really good time to raise money and expand and grow. Once you get over that curve and start going into the next area, you've probably got 3 to 5 years of really tough times ahead of you. And we see that coming for a couple of the players here over the next couple of years. So what we do is we take this research that we just shared with you, the summary of which we just shared with you, and we compare it to what we call our TenX traction index, and these are the components, the 6 components and subcomponents that we use, and we track all these companies against these components, the subcomponents, to see how are they really doing. We do this in every industry that we work in, and in the space industry, here's sort of how it shakes out for now by the traction index, who's getting the most traction, who seems to be driving the most. By the bottom here, you can see by segment down there, a lot of movement going on. These things are quite fluid on a quarterly basis, particularly in some of the non-heavy capital businesses. And then we take the same traction index and we map it by age, because we find that what ends up happening is you're able to understand where the gazelles and where the rabbits are, and frankly where the zombies probably are, and it gives you a really good sense of where we should be looking to invest and what companies and what specific segments are the most attractive to us. So I'll talk to you a little bit about one of our investments here. Well, I don't know what happened up there, guys, but the market's large. I'll tell you about the one in the middle, but a growing branch of science, commercializing zero gravity. We know for sure in the experiments that we've conducted, and I'm sorry, I don't know why these aren't working. Guys, is there a way to fix that graphic at all for the folks, or it's going to be hard for them to read that? I can read it to them, but it allows for 8 times cell representation, 8 times replication of cells in space, and almost unlimited proven. Hang on a sec, guys. Let me see if they can do this. Well, let's just put it back up then if you can't fix it, right? Okay. So here's what we know. Zero gravity. Thank you. Right there. Zero gravity allows for the transformation of cells in space. Human, animal, plant, stem cells in space. 8 times cell differentiation has already been proven. Hundreds of peer-reviewed articles on this. Proven exponential replication of cells. And this branch of science integrates very beautifully with a natural cycle called the Krebs cycle, which is a human cycle and a biological cycle. I won't read the individual ones in the middle there because you can see they're all mixed up for some reason, but it's about $2.5 trillion in markets today that this company can and is disrupting. About $7 trillion by 2030, the markets they can target. I'll talk you through the missions here quickly. The first one was we took pig liver up and proved that we could mass produce this in space. The second handful of missions were around growing about a dozen crops in space, where we proved we can grow them bigger, faster, and actually change and tease the cells and train the cells to behave differently. And the last set of launches we did was around a specific plant called the jatropha tree, which is clean energy. I'm going to talk about that in a moment here. So a world-class team in the room here today. We have team, we have investors. So just maybe a show of hands. Richard, I think, is in the room somewhere here. Richard's here. Nathan, are you in the room somewhere here? Nathan here. And we have a couple of investors. I think Lionel and Patricia are here. So there's folks in the room if you want to talk to them about the company and what we're doing. A great team all around, mission team, amazing patent experts, great team. What's the secret sauce of this company? The secret sauce is what we call directed expression, and this is this ability to take 8 times cell differentiation and exponential replication of human, animal, and plant cells in zero gravity in three dimensions in space. And this is a big step, right? This company is solving some major problems in the world, creating clean energy, feeding the world, eliminating some major diseases, maybe even saving some of these endangered species with some of their technology, and hopefully helping NASA achieve its mission to Mars. Space Cells is really a commercialization platform that delivers these kinds of outcomes that you see here. Grows the plants bigger and faster, adapts them to climate change, allows us to create new varieties and species, reduces or eliminates disease, and allows us to grow cells en masse. Our go-to-market is a joint venture approach in many key sectors. You can see the focus areas there that we talk about and the problems that we talk about. Our first joint ventures, you can see on the right-hand side of the screen there, Jatropha for jet fuel. We're in conversations today with a number of players on that. We're taking up coffee and hemp on the SpaceX 19 flight to prove that we can adjust and adapt those. And in the March 2020 flight, we're taking up human beta islet cells, human stem cells, and stem cells from a liver, and proving that we can grow those en masse. So this is sort of our key sectors. Jatropha is a big opportunity for us on the clean energy side. Cheap and abundant stem cells. We think we can make stem cells cheaper than cell phones and more abundant than cell phones. Our pipeline is rich. We're looking for partners all the time. Roses, growing saltwater and rice, bananas, you name it. We think there are major opportunities here. Investors get $1.30 for every dollar they put into our company based on the structure we put in place. So it's a guaranteed 30% return in the first year. They get liquid, and they get to change the world. Thank you for your time. Thank you for your interest. My contact info is on the bottom there. You're welcome to reach me. I'm here for the next day and a half. I have to leave, unfortunately, tomorrow at lunch after our panel session. But I am here today, I am here tonight, I am here tomorrow. I'd love to meet anybody that's interested in what we're doing, and I'd love to get your feedback. So thank you for your interest. Thank you for your time. I'll get you your bottle of wine here in a moment. Have a great conference, and really appreciate the opportunity to be here with you. Thank you.